Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. On the heels of our 2025 Brookfield Investor Day, Connor Teskey, president of Brookfield Asset Management, and Hadley Peer Marshall, CFO of Brookfield Asset Management, join us to share key takeaways and what's on the horizon. Here's our conversation. Hadley, Connor, it's great to have you here today. We are excited that you're here to give us the punchline from Investor Day. What do you want people to take away?
We were very excited to host our Investor Day yesterday, and just jumping to the punchline, we have delivered consistently strong returns when you think about the significant growth expectations that we put against our business. And we've actually done that repeatedly. We really showed over the past 5 years, 15% growth rate, and it's just going to make the next 5 years even bigger. So when we look forward to the next 5 years, our flagships will be a big part of the contribution. And they are the launching pad for our complementary strategies, which will actually have 100% growth attached to those strategies. And then wealth solutions. This is a big area for us where we are at about $100 billion of fee-bearing capital now, growing to $325 billion. So when you add that all up together, we see 18% growth rates around our business, which is quite exciting.
But Hadley, there's upsides to that plan as well. We think there's several paths to outperforming that 18% base case. And the two that are probably most relevant and expected of our business is, one, the ability to continue to evolve the platform, offer new and adjacent products that, one, meet the evolving needs of the market, but two, are tailored to the specific needs of an increasingly diverse base of investors that are trying to get access to alternatives. And the one that we highlighted a lot yesterday was the launch of our new AI infrastructure strategy. And we're excited about this because, in a way, it's history repeating itself. 4 years ago, we launched our energy transition strategy that leveraged our long track record in renewables. And today we have a very significant platform that has multiple market-leading products within energy transition. Fast forward 4 years, AI is a major theme across everything we're doing at Brookfield right now. It's driving our energy business. It's driving our infrastructure business. We're using AI to drive efficiency in our operating businesses within private equity. But without a doubt, the largest opportunity within AI is the role that private capital can play in funding the significant growth in AI infrastructure that is required over the years and decades to come. And this is why we are launching a dedicated AI infrastructure strategy. It's going to focus on building gigafactories on behalf of hyperscalers and sovereign AI counterparties, as well as in investing in the value chain and the supply chain that's going to support that whole ecosystem. It's leveraging our leadership in digital infrastructure, our relationships with the hyperscalers, our experience in advanced manufacturing, our power capabilities across nuclear, renewables, traditional forms. All of that puts us in a place to launch a market-leading AI infrastructure strategy, which we think is one of the most generational investment opportunities in the market today.
That plus the opening up of the 401k market, M&A of just our existing partner managers, all of those are levers that will continue to generate growth for us, even above potentially 20%.
Well, you mentioned 401ks, but just the way we described it yesterday at Investor Day was the individual investor. That's your retail and high net worth client. That's your annuity or insurance policy holder. That's your 401k, the retiree market. And we're exceptionally excited about this because we think it is one of the, if not the largest growth driver for our business in the years and decades to come. But what's important to reinforce is the winners in that space are going to be defined by who has the brand, the scale, and the track record. And here we feel we are unmatched. But perhaps even more important than that is that new investor base, the individual investor. They're seeking the higher returns that come with alternatives. but they put more value, they put a higher premium on consistency, downside protection, and liquidity. And this is where our focus on real assets that have durable, cash generative, inflation linked, long duration revenue streams. We feel we have the largest platform in the world that has the products and capabilities that are best suited to meet the needs of that growing individual investor in alternatives. That is a multi-decade tailwind for our business.
Let's talk a little bit about the market, because obviously you've given us a great overview of where we feel we're at. What's going on? What are we seeing? And how does that set us up for what's coming?
Well, Hadley should give you the numbers because it's been our most active 12 months in our history, and we don't see it slowing down.
Truly. We have deployed $135 billion over the past 12 months. That's a really big number.
But we're selling as well.
Absolutely.
This is the thing that's interesting about this market is not only are we deploying record amounts of capital, we're also monetizing record amounts of assets and returning via distributions to our LPs. In the last 12 months, we've sold $75 billion of assets.
Absolutely. And you know what's interesting is that market, the M&A market hasn't been strong. And we had a record year. And we used different formats. We sold partials. We used the IPO market, which we occasionally do. And then we sold assets outright. But there was a strong environment for the type of investments that we have.
And this is something we reinforced yesterday, which was our focus on those real, essential, critical assets, the backbone of the global economy. The joy of them is they produce stable and growing streams of cash flow, which means even when market conditions are not ideal, we still have multiple levers we can pull. We can up-finance assets or monetize them. We don't need that super high valuation exit in order to generate our returns. One of the things we highlighted was we've actually had one of our most active periods for returning capital within real estate and private equity. Those are two sectors that right now the headline narrative is investors aren't getting their money back. We're seeing the opposite in our business, which gets us pretty excited about our ability to grow going forward.
A lot of runway.
And the deployment side, if you think about some of the significant transactions we've done over the past 12 months, Hotwire, Colonial, some of these.
Duke Energy.
Yeah, Duke Energy. I mean, it just
Neoen.
keeps going. Yeah. It's been really exciting.
All right. So we'll leave off with this. What are you most excited about? And what do you want to share with our listeners about what's ahead for you?
In terms of the market, the recovery and the strength of the fundamentals in real estate is, we don't think, fully appreciated. The reality is the fundamentals that support real estate investing have been robust for 12 to 15 months now. But what's changed more recently is the capital markets have opened up for real estate and the sentiment has changed. And we're seeing that show up in transaction volumes as well as valuations. And what's exciting about the real estate market for our business is if we think about this cycle, rates are a little bit higher, which means there's going to be a little bit less debt in the capital structures. It's going to lend itself to those who can really drive value in operations within real estate platforms. And that is what our real estate team does very well. So I think real estate's a sector that we are very excited about today that we think has a lot of room to run, and maybe the market isn't speaking about enough. Just about our business, we have a great platform. It continues to grow, but maybe what's not appreciated is how on a repeatable and ongoing basis, we keep finding new growth levers. And that ensures that over an extended period of time, we can continue our growth trajectory of the past, even as our platform continues to scale up. And it's putting us in a position where we should exceed our long-term targets, not just for the next 5 years, but beyond.
That is an excellent point. And it's hard to follow that because that's probably the way to end this conversation. But I'll add one more thought because I do have a credit background. So I got to plug credit. We have continued to expand our capabilities within Brookfield and our partner managers. And we now focus on our core competencies of asset-backed finance, real assets, and opportunistic credit. And I just think there's going to be so much more growth because we really have stuck to where there's a distinct advantage for us and where we can see attractive risk-adjusted returns.
I'm left with the word opportunity from everything you all have said. So I think that's a good thought to leave on. Thanks so much.
Thank you.
Thank you.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.